Hey everyone. We need to talk about a financial reality that feels completely backwards. If you or someone you know thinks investing is only for the ultra-rich or mathematical geniuses, this is something you will want to hear because it could change your entire future. So here is the situation. We are constantly told that Wall Street is this invincible, multi-trillion-dollar machine. It is packed with hedge fund managers in tailored suits, supercomputers executing thousands of trades a millisecond, and teams of analysts staring at glowing screens all day long. They have billions of dollars at their disposal and access to insider data most of us cannot even fathom. Now the official narrative behind all this: you need them to grow your money. Wall Street wants you to believe that the market is a dangerous jungle and you need a highly paid guide to survive. But here is the problem. Trying to play their game is making financial independence impossible for the very people who need it the most. You see, an average person working a full-time job does not have 10 hours a day to study complex stock charts. Most of us do not have the resources to build quantitative trading algorithms or the stomach to risk our life savings on a speculative gamble. For someone who is just trying to pay rent and buy groceries, suddenly being told you need to master advanced financial modeling isn't just overwhelming. It is a massive barrier. It keeps everyday people from ever investing a single dime. And then there is the issue of the actual results. What if I told you that despite all those supercomputers and Ivy League degrees, 90% of these highly paid professional investors actually fail to beat the basic stock market over the long run? Imagine spending all that money on a supposedly elite system, only to lose to a pile of average stocks. This is where the game changes for you. We are going to strip away all that intimidating financial jargon and translate their complex math into a single, manageable habit. You do not need a fancy degree or $1 million trust fund. All you need is $50 a week and a little bit of patience. By turning an automated, tiny weekly deposit into your own personal financial engine, you can quietly outperform the loudest, most expensive suits in New York. Now, building wealth is important, but why try to beat a complex system when you can simply use its own momentum against it? To do that, we first need to completely ignore the noise. Throw out the idea of day trading, obsessing over chaotic charts, or gambling on complicated stock options. That high-stress, rapid-fire trading is exactly the trap Wall Street wants you to fall into. It is a fantastic way to lose your savings and your sanity. For someone who is already exhausted after a long day of work, trying to time the market by staring at flashing numbers is a massive barrier. It is incredibly difficult and completely unnecessary. Instead of treating the stock market like a high-stakes casino, we need to look at what it actually is. In a nutshell, it is simply a vehicle, a beautifully boring, highly efficient machine designed to capture corporate profits over time. You are not betting on a horse race. You are buying a microscopic slice of the global economy. When people buy groceries, upgrade their phones, or stream a movie, companies make money. And if you own a piece of those companies, you make money too. So how do you actually do this without a finance degree? You use something called an index fund. Specifically, the S&P 500. Think of it as a single, prepackaged basket that holds a tiny piece of the 500 largest, most successful companies in America. You get a sliver of the biggest tech giants, healthcare providers, and consumer brands all at once. If one company starts failing, it drops out of the basket and a new, stronger one replaces it automatically. The system cleans itself without you lifting a finger. But here is where the real magic happens. You do not try to guess the perfect moment to buy this basket. You just set up an automatic transfer of $50 every single week. No matter what the news says. No matter if the market is up, down, or sideways. Financial experts call this dollar cost averaging. But you can just think of it as putting your wealth on autopilot. When the market is expensive, your $50 buys fewer shares. When the market crashes and everyone else is panicking, your $50 automatically buys more shares on sale. You never have to think about it. And you completely eliminate the emotional mistakes that destroy the portfolios of professional investors. Think about where that $50 actually comes from. $50 a week might not sound like enough to build a fortune, but it is essentially a couple of takeout dinners, a few rounds of expensive coffee, or a subscription box you forgot to cancel. It is money that often slips right through our fingers without us even noticing. But when you redirect that exact same amount into this automated system, you fundamentally change your financial trajectory. Consider the actual math of what happens next. If you hide $50 under your mattress every week, after 10 years, you will have saved exactly $26,000. But if you feed it into your S&P 500 basket, assuming an average historical return of roughly 10%, that same weekly $50 transforms into over $40,000. Now fast forward 30 years. Under the mattress, your savings sit at $78,000. But inside that index fund, your money has been working relentlessly. It is compounding, snowballing year after year, turning into a staggering $440,000. Your actual out-of-pocket contribution was identical in both scenarios, but the compounding engine multiplied your wealth almost 6 times over. But here is the real twist, and the part that Wall Street absolutely hates talking about. You might think the highly paid guys in the tailored suits are doing even better than this. After all, they have access to complex algorithms, insider industry knowledge, and armies of analysts. Yet year after year, the data shows something completely backward. When you compare these active professional managers against our boring, automated S&P 500 basket, the professionals overwhelmingly lose. Over a 15-year period, nearly 90% of actively managed investment funds underperform the basic market index. They are trying so hard to outsmart the system, frantically jumping in and out of stocks, that they end up tripping over their own feet. For someone paying thousands of dollars in fees for their supposedly elite services, suddenly realizing they would have made more money by doing absolutely nothing is a harsh wake-up call. And the reason behind this massive failure rate is a hidden trap that you are completely bypassing with your simple weekly habit. You see, that trap is the illusion of a tiny fee. When a professional manager charges a 2% annual fee, it sounds completely harmless. It feels like leaving a small tip on a restaurant bill. But in the world of compounding, a 2% fee is not a tip. It is a massive leak in the hull of your financial ship. Because that fee does not just take 2% of your original money. It steals 2% of your total growth every single year. Over a 30-year period, that seemingly innocent fee can silently devour up to a third of your entire potential wealth. Your $50 weekly strategy entirely bypasses this. By using a basic index fund, your fees are practically zero. You are sailing in a leak-proof ship, capturing almost 100% of the market's exponential growth. So how do you actually cross the finish line and set this up? It requires almost no effort. You simply open a standard brokerage account online, which takes about 5 minutes. You link your regular checking account, search for a broad S&P 500 index fund, and look for the button that says recurring investment. You type in $50, set the frequency to weekly, and confirm. That is it. You do not need to check financial news. You do not need to look at stock charts. And you should probably just close the app entirely. Let the automated system do exactly what it was designed to do. In the end, this changes everything we are taught about getting ahead. The financial industry desperately wants you to believe that wealth creation is a chaotic battlefield where only the most aggressive traders survive. But the math tells a much quieter, more beautiful story. Beating the market is not about outsmarting the person next to you. And it is certainly not about predicting the future. It is about unwavering, mechanical participation. You are simply planting a single seed, turning on an automated sprinkler, and then walking away to live your life. When you finally look back decades later, you will not find a pile of stressful trades. You will find a towering forest that quietly grew on its own, fed by nothing more than time and $50 a week.